Kenya, where there are no easy times right now for the country, the biggest economy east of the continent, especially for the administration of President William Ruto, which came into office in September last year. Aside the fiscal headwinds that the country faces, investors have also been exiting the markets. The Nairobi Securities Exchange has been ranked the worst performing African exchange in the first 9 months of this year in US dollar terms. Now let's dig behind all of this with Aly-Khan Satchu. Ali is a market professional and the founder and CEO at Reach Frontiers. A great evening to you, my friend in Nairobi. Thanks for making the time on the show as always.
It's a pleasure to be with you, Bosun. Thank you for having me.
Just a bit earlier, and I was talking about the economy PMI, 47.8 reading. That's a contraction. But let's start on the market. What's biting the market since the start of the year to the downside? What's the virus?
As you correctly stated, the Nairobi Securities Exchange has been the worst performing stock market anywhere in the world. This was a report on Bloomberg. And it's really been an annus horribilis at the stock exchange. We've seen a significant reverse pretty much across the board. The only bright spot in the entire securities exchange has been exporters who've been benefiting from the weaker shilling. And there's a very small corner of the market, the plantation stocks, tea companies, and they've been blasting higher. So it's only that component of the entire stock exchange which has been producing absolute returns. Foreign investors have fled the market. You can see that in the price action of Safaricom. Volumes have collapsed to an average of $1 million, $1.5 million a day, when we used to regularly see $10 million days. So it's really a distressed market, and at the moment, it's difficult to call a turnaround. Obviously, one of the biggest challenges this year has been the shilling, which has been sliding dramatically, at least for Kenya's metrics. Last trading around 154, and we're down pretty substantially this year. And one of the problems for the stock exchange and other asset markets in Kenya was the throttling back of foreign exchange availability, which meant foreign investors were not able to exchange their sale proceeds for dollars and exit the market. They were trapped. This is a big problem in many parts of Africa. Once you do that, you're increasing the risk calculation for your market. It means credit officers will look very carefully at investment propositions on the buy side for those economies. And I think that also put a lot of pressure on the stock market. And then finally, really the big beast of this all, of all the asset markets, the bond market. The problem was going into this year, banks, insurance companies were long up the wazoo of Kenya government bonds. They really didn't have much room on their books. We then had this significant markdown in asset prices in the bond market. Of course, not as bad as the write-downs we're seeing in the long end of the bond market in Europe and in the US, where the collapse in prices has been the equivalent of the collapse in the dot-com crash of internet stocks. But nevertheless, that added additional pressure. So it's been a trifecta, and it's been very difficult to see a thread, a needle through this space for most investors.
So, Ali, how tough is Kenya's political and the social economic right now for President Ruto, and how is he handling it? Do we still have backlog on resolved issues of the last election being dealt with in terms of the cabinet, who is doing what at the moment? Is that all of that buffeting the markets?
So, President Ruto was in the previous government, but he was semi-detached, as you probably know. President Kenyatta had his handshake with the opposition leader and very much governed the country to the exclusion of William Ruto. So he inherited a very bad hand, and essentially that bad hand was outrageous fiscal profligacy in the previous administration. where they borrowed way too heavily, did not really get value for money for their borrowing. And basically that got dumped on Ruto's administration. So, he's been firefighting in the sense that nearly 60 shillings of each 100 shillings being collected in tax is going into debt service. Now, in that context, he's responded by trying to raise taxes in order to meet those interest payments. This is compounding a cost of living crisis that's happened in Kenya. And so far, the people have given him the benefit of the doubt. But politically speaking, it's tricky to work out how long he has that benefit of the doubt. And the other problem is really you can keep raising taxes, but you hit this Laffer curve problem at some point where, you can't, the pips are squeaking, as it were, and you can't extract more tax from the system. And I think essentially that's the problem. For example, I saw oil consumption, petrol, diesel, etc., has dumped by about 20% since the taxes were raised. So you can see the trade-off that's happening. So it's a fiendishly complicated hand he's playing. I think he still has the goodwill of the country, but it's, the country's under tremendous pressure across the board, as is the economy. And he really needs some kind of silver bullet. I think we're still 24 months away from a recovery. He's trying to take the pain up front because of the political cycle. And hopefully within 24 months, he can start reducing some of these tax increases and creating a more of a feel-good factor. But it's going to be tough. And then you've got, ahead of us, you've got this redemption of a Eurobond in 2024, which is pretty chunky now because of the slide in the shilling. It's a $2 billion call. And our reserves are about 3 times or just above 3 times that amount. So it's tricky. It really is.
Yes. So, Ali, where is President Ruto and the financial markets getting any help? In a manner of speaking, the Eurobond repayments is just a couple of months away in June or so. Do you have any concrete assistance coming through from the multilateral institutions anytime soon?
So, President Ruto realigned Kenya very aggressively east to west. He's been supportive of the Ukraine war, something that's been difficult to source on the African continent. So he's been an outlier in that regard. And there's been a degree of reciprocal behavior from Western countries and institutions. The IMF, the World Bank have been supportive, as have the Americans. But the IMF has several programs in play. The World Bank has been supporting him. But he really needs a ton more cash. And he needs help with the redemption of that Eurobond. That's a $2 billion call on top. So whilst the realignment's working to some degree, the proof is going to be in the pudding, and that pudding is coming, next year.
Great. We appreciate that. Let's hope things clear up a little bit by next year. Thank you so much for those deep insights, as always, on East African markets and the economy. Have a great evening.